Tuesday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with my co-hosts. We got all three of us here today. I like it. Let's go around the horn. Dwight Millard, Highlands Mortgage. How are you, my friend?
Looking
debonair. Looks like you're sitting in that $1 million attorney's office. I love it.
There you go.
I love it.
There you go.
Wish I had that backdrop you do, brother. I wish I had it.
Yeah, me too. Me too. No, I'm doing fantastic, John. How are you?
Good, buddy. Good, buddy. Corey Edge of Edge Realty on the mobile scene today. How are you, my friend?
Doing well. Doing good.
Good deal.
Yes, sir.
Getting ready to make the trek over the mountain tonight?
Not tonight. Monday, Wednesday, Friday.
Well, that's right. What am I thinking? You're at the soccer practice right now. You're not. Yeah, that's right. Different one. That's for sure. All right, boys. Well, good. Glad everybody's doing good. We hope all of you are doing well. You had a great day today. Let me tell you what we have lined up for you. We're going to discuss again the, how can I say it? A wild ride. I know I use that term way too much, but it was a wild ride on the street today. A lot of strength in the beginning of the session, and then we faded, and then we clawed our way back a little bit, at least on the down, the S&P side of things. But there's some underpinnings going on. So we're going to tell you what's happening to help you on the money side of things. And then we're going to get into a very, very interesting topic. Folks, you're going to, I hope you're sitting down when I tell you this, because this is something that kind of blew me away when I came across the news wires today. You see, builders are floating a plan to build nearly 1 million new homes. They're going to be called Trump homes. I'm sure you're surprised about that. This is a response to, of course, something we discuss all the time on this show, and that is America's affordability crisis. Today, we're going to be going through what this would mean for would-be buyers, for home prices, the details of the program as we know them, and I'll just forewarn you, these details are very sketchy at this point. This is something that's being floated at this point. Matter of fact, we're going to find out whether the White House is really behind it or is it just talk. Because what you're going to learn is we had some major home builders come out today to the press, talk about the Trump homes, how this whole program is going to work. But the White House said, we're really not talking about it. Now, I don't know if this was just a political ploy to say, don't get too excited about it at this point, or what the strategy was behind it. All I know is it is brand new. Could be a phenomenal idea. Could be a bust idea. Can't wait to find out from the boys. We have not had a chance to discuss it. We wanted to wait till the show to go through the details with you. But essentially, this is going to be a rent-to-own program for you, the real estate investor. So, Corey, if this thing goes through, I think, my friend, you and other real estate professionals are going to be really, really busy on this, because there's going to be 1 million homes around the country if this plan comes to fruition. And guess what? And Dwight's going to be very busy. And guess what? These investors want to turn around and rent the home to you. And then part of something Corey has always talked about on this rent-to-own program, part of your monthly payment, i.e. the rent, gets to go towards a down payment. Corey, they're pulling the old RTO strategy out of the playbook with this idea, aren't they?
It'll be very interesting to see how this plays out, if it plays out. I don't know how busy we'll be, John, because this seems like, from reading a couple different articles, it seems like a confined little, only the people that I allow to come play can come play, and maybe realtors won't be involved, lenders may or may not be involved. We'll see. And they don't really talk about the private investors that are going to take down. My calculator, I mean, it's such a big number. What is 1 million times 400,000, which is the average price of a new home?
Yeah.
Like, I don't know who the private investors are that are going to put up the capital, but we'll see.
Dwight, are you going to give the capital?
No, I'm not. No.
No.
Well,
President Trump launches this program, and you got qualified investors. Come on.
I think it's. I agree with Corey. I think it's kind of like the floating the 50-year mortgage concept. So? Yeah, This is going to be a little tougher.
I think it's got legs.
Okay, and if it does, and it does well, then what's to stop another million and another million, type of thing. So you're right, but I do believe it when you look at the overall cost. They're going to try to eliminate as much as they can. Any fluff, realtors, lender, they're just going to try to make it an online type of thing, I guess. But it'll be interesting. But you are creating something that eventually will recycle down the line and be sold and bought and listed or whatever. So I hope it does. I hope it does gain some. I think maybe not to ease the housing crisis, but at least the interest rates. I think there's easier ways to get those down and get people moving around.
What's interesting, and again, we're going to go through so many details of this, but what's interesting is they're talking about doing this from an affordability standpoint, right? They want to make more homes affordable. You had Trump come out over the weekend saying, I'm not really worried about affordability. I want people to buy a house so they can build their wealth. That's his whole intention. I don't know, honestly, if affordability is the main catalyst behind this. How can it be affordable other than, again, you're going to do a little rent to own situation? I have a lot of questions, as far, and I think everybody does, because we don't have the answers at this point. If my rent payment's $3,000 a month, and who knows what the dollar amount is? Let's just say it's $500. So $2,500 is going to the investor. The $500 is going where? And then how? I guess, Corey, you would have to say the investor. Let's say you're the investor, Corey. I guess going into this program, you have to guarantee that you're willing to sell that house at a predetermined price and at a predetermined time to me, the renter, right? I mean, that's how an RTO works. You come in, you go, all right, X amount of dollars is going to go towards the down payments, like a forced savings account. But you and I agree on a definitive time, a definitive amount. And then when that time comes around, I can make the final decision. Do I want to buy this home from Corey, or do I not? Do I want to walk? What happens to my down payment? I mean, there's a lot of details to this, right?
And do I qualify to buy in 3 years? Where's the steady?
Right.
The other thing that, and again,
or the government back it up. Yeah.
I don't want to be super pessimistic on this, but if you read the articles, I read multiple articles on it. So it sounds like the building industry created this.
Yes.
Named it with the fancy Trump name and has brought it to the White House to see if it can gain traction. Mm-hmm. So nothing against them. We live in a capitalistic society. The builders are going to make money, otherwise they wouldn't come up with the plan. Whoever the investor is in the middle is probably going to be hedge funds, and these guys, they're going to make money. So typically, not trying to bash your industry, John, but typically, if the company and the hedge funds are making money, the person that isn't is the end user. So we'll see how this all kind of shakes out. It sounds super fancy, and maybe it gets Trump excited for midterms, but is it actually going to do anything to help people?
Did you see, because I didn't, but I haven't followed it since I came across it early this morning. Have you seen something this afternoon, Corey, in any of the news wires indicating that institutional investors will be involved in this?
There is an investor somewhere in the middle. So the builders build 1 million homes. They put them into a fund, or they put them into a category, but there's an investor in there that buys them from the builder. And then that investor leases them out. So they haven't said who that investor is, but they said it'll be private wealthy investors, which, as we all know, same people that are building the new East Wing, same people that are like, it's going to be people that probably don't want to do it, but they'll do it to save.
How do we know it's not going to be your average investor?
Do you want me to be pessimistic, John? Like, why would Wall Street create something why would Wall Street create something and let the individual guy make money?
Wall Street's not creating it. The home builders are creating it.
They're publicly traded. Trust me, the end investor may come in the very end, but there's not going to be any money made in the middle of it.
So you think the Blackstones of the world, the KKRs, all these companies, all their names escape me, but that whole group that bought the homes after the financial crisis, the housing crisis, came in, bought, whatever the current number is, millions of homes, took them out of the market, turned around and rented them. And then Trump comes out and bashes them the other day and says, you guys can't do this anymore. So you think you think this is a backdoor way of, appeasing a very wealthy donor base to allow them to come back in and get back involved in the rental market?
I think it's a way that the builders have come up with this plan because one of their own is running FHFA, so it sounds nice. Who knows who those middle investors are going to be, but it's not going to be individual people because those individual people, they don't have the money to cash out and say, I'm going to buy 10 of the Trump houses and I'm going to write a check for it. They're going to have to go get a loan from Dwight. And if you have a predetermined price on that rent to own and all, the financials don't work that well for the individual person.
John, what would be interesting too is wherever, if they do go forward with this, wherever it goes, I think I was reading an article, and I don't know if I shared it with you. I think the average home increased $39,000, I think, in the last year or two. I mean, in terms of building costs. I mean, is the government going to come in, the locals, give them, cheaper hookup fees and things like, I mean, if you're going to make a home affordable, there's a lot of ways to do it, right? It starts with the government, it starts with permits, it starts with all this stuff, and you get it all the way through, and then you can finally get this end product. Somebody's making money somewhere. Somebody. And so it'll be interesting to see if, in fact, that municipalities play ball too in it, because they're going with their money. Property taxes, insurance.
Or you have the Trump administration, i.e. Washington, coming down to the locals, municipalities, and saying, you will do this.
Yeah, but why don't they do it for everybody else? But that's what I'm saying. Why don't they do it for everybody?
But that's the last thing you want. That's an Obama plan.
Yeah. But
it's coming in. What if they came out to the ranch and they said, "Hey, John, I don't care what you're doing. We're going to put 1,000 houses right next to you." You'd be like, "The hell you?"
Of course, they kind of do it with eminent domain.
They could, but you got to get through a court.
Yep, exactly. So as you see, I'll be honest with you, you guys are not giving me the reaction I thought you were going to have. I thought you guys were going to be giddy about this, but this is why we do this show, is to debate and parse it and look at the pros and look at the cons of an idea, a strategy, or something. And again, folks, what we don't know, we can speculate all day long. Is again, the details are unknown really at this point. And what worries me is, again, the Trump administration coming out and saying, no, we're almost like we really don't know anything about this, which I sincerely doubt that that's true.
Yeah.
But anyways, it's going to be a really interesting discussion that we'll have. We're going to come back. We're going to go through the stock market, the volatility, what happened today, why it happened. Then we'll get into Trump homes and the housing crunch is what we've called today's show. Let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Corey Edge of Edge Realty to White Millard of Highlands Mortgage. All right, so let me kind of give you the 10,000-foot view of what happened today. We were strong in the pre-market session, at least on the NASDAQ side of things. We're a little bit weak on the Dow side and a little bit weak on the S&P side. Market opens up. It's like the features were completely lying to us. Within moments, the Dow shoots up to a 200-point gain. It's like, okay, we're off to the races, right? Tack on to yesterday's gains. Well, lasts about the blink of an eye. And next thing you know, the Dow starts to weaken, NASDAQ starts to weaken, and before you know it, they're selling everything else. No news behind it. We get down to our worst level, which was nearly a 500-point. I think we actually did it real briefly. We touched a 500-point loss on the Dow. Starts to come back a little bit. Then they, as anticipated, the government announced that it's no longer shut down. So that gave the market a little bit of a boost. But we had some huge buying orders come in on the Dow side of things. And again, the algorithms, once you get a couple big buy orders come in, you tend to see more follow. And that's exactly what it was. It was the domino effect. And we finished today really not all that bad. I mean, considering down 167 on the Dow was our close, 0.34%, closing at 49,240. NASDAQ didn't quite recover the same, finished the day with a loss of 337, 1.43%, at a level of 23,255, and the S&P down 59 points, 0.84%, to close at 6,917. Strong day for oil, though, 97-cent gain, 63.16. Here was the other interesting factor. This massive sell-off we've been seeing for the last few days in gold, well, it stopped today at least. $277.50 rise on gold, up 6% to $4,731.46 an ounce. And Mr. Millard, we finished unchanged on the 10-year Treasury at a yield of 4.27. I imagine not much action in the mortgage side. Am I correct?
You had a minor uptick in the 30-year up to 6.20. So we're staying in this stubborn range now, John, above the sixes. And I think everybody out there, including myself, was hopeful that these rates were going to start to come inside of the six. And I think you would start to see a very, very active spring, getting ready, springtime. This
feels like we're already in spring.
Yeah, it kind of threw a wrench in it, John. There seems to be more activity going on. Corey can probably say, but to go right into the fine line of signing a contract they're just taking their time now.
What are they waiting for?
Rates to come down. Rates to come down.
What makes them think rates are going to come down?
The media. I mean, they keep saying, John, we've seen them. I mean, the media will say, hey, rates are low this week. Well, I didn't see that they went down. My rates went up. How do you? So, right. I mean, there's such misinformation, we call it, I guess, out there that people just think these
rates. I'm not seeing that. I'm not, I'll glance at the quote non-financial websites periodically. And I'm not seeing anybody coming out and saying, hey, rates are going to go lower. Rates are going to go lower. It just seems to be, hey, rates are kind of where they are. We're going to hold steady. That's why I posed that question to you. It's like, I don't know where
what's amazing is every phone call, all I want is the best rate and the best payment. Well, no, duh. That's no kidding, you and everybody else, right? I mean, you don't have to tell me that. Right place. Oh, no, No, I thought you wanted a higher rate and a higher payment. But I mean, they are being stubborn, and it's unfortunate. We're up a little bit, but yeah, I think everybody was just hoping they would be inside the sixes by now, John.
Okay,
that's
I think. And I want to stand corrected before I forget. I think I said when I was going over gold prices, 4,731. I meant 4,931.46 is where it closed at. So you guys don't need to drive off the road if you think, oh my God, it finished down $200 or something. No, not at all. Not at all. Hey, Corey, let's bring you into the fold here. Let's get your opinion on what's going on today. I can tell you're not in the best mood, so you're gonna lay it on us and tell us exactly what's going on. What are you seeing out there? What's your pulse?
I'm hangry. I haven't eaten all day, so
I'm with you. Same way. Nothing since breakfast.
I agree with Dwight. I think it could be a good spring. Obviously, we've got this crazy, beautiful weather that's here.
Yes.
I think buyers just aren't. There's not a massive sense of urgency anymore because prices have been stagnant for a couple years. Buyers know that. And if I was a buyer kind of waiting, and if I was in tune with some stuff, I would listen to what the president has said over the last 30, 60 days about all these things he's going to do to help buyers. And maybe I would sit back a little bit and say, well, I'm comfortable in my apartment. My rent's fine. I'm going to wait and see if any of this stuff actually is helpful or not, because prices aren't going up. So there's no reason for me to pull the trigger now. I'm not going to lose anything.
Corey, and I'm going to throw the same question to you, Dwight, so listen closely. Corey, what % of the reason that someone is sitting on the fence is rate related versus I'm going to wait and see?
Well, those might be the same thing.
No, one person said, well, let me clarify. One person says, I'm not going to do anything because I think rates are going to come down. Another person says, I'm not going to do anything because I think prices are going to come down. Sometimes they're one of the same, but you find a lot of times people usually are one camp or the others.
Yeah, no, I agree. If somebody can afford it and the rate doesn't matter and they're just waiting on prices or to see what the administration does, I don't know, 50-50 maybe. It's hard to say. But again, I do think there is something to the fact that prior to the last 2 years, prices were going up exponentially every year. And people are like, if I don't get in, I'll never be able to be an owner.
Right.
And now it's like, well, it doesn't matter if I buy it today or 3 months from now because the prices
That's why I
moved.
think if that question was posed to me, I would lean probably 70% that's the reason they're waiting for prices to come down, more so than the 30% that's waiting for rates to come down. Like you always say, Dwight, and again, I want to get your opinion on this. The drop in rates significant, even 0.25% is not a significant difference in the monthly payment. Maybe it is qualifying wise, but if you go, hey, you know what? I think prices are going to come down. This $700,000 home, I think it's going to come down to 620 or 650 or something. I think the human brain can relate more to that than I'm going to go from 6.25 down to 6. I don't know, just my opinion.
You know what? That's why this show is so good, because you guys are correct. I mean, once they sign the contract, it's all about rate, right?
Right.
But up until that, I think Corey brings up once the prices stabilize and you feel like they stabilized, you've got nothing but time now to kind of wait. You don't need, if you're in a nice rental or whatever you're doing at parents' home, if you don't have to move, then you can just sit and see if any of this makes a difference. And I would agree, I guess, but you'd sit there, and Corey has said this before, if we did get a major drop in rates, what is that really going to do to the home prices? Are they going to go up? Are we going to have more inventory?
It's going to have much impact at all. I really don't. I mean, that's a great point you bring up. And I don't think it's going to do much unless obviously a significant rate drop. I mean, 0.25%, 0.5%, somewhere around there. But more importantly, it could backfire, right, Corey? Rates could drop and we could actually see prices go up because the demand is going to increase. So let's not rule that out.
The demand and the inventory comes on the market, which pushes it. And I was glad to hear Trump, from my seat sitting here all nice and cozy, but I was glad to hear him say, I want to protect the prices where they're at, because it doesn't seem, to me, it doesn't feel like you can have both. You can't resolve the inventory problem and have prices stay where they're at. It doesn't, I don't know that it can work that way.
Well, as both of you have come out over the years with different strategies, ideas, if you were the president, here's what I would do type of thing. I mean, Corey, from you saying, figure out a way to be able to move, the person that has that 3.25% mortgage to a 3.25% mortgage in their new home, right? There's one strategy. Again, I'm not saying one's right or wrong, but there's one strategy. Dwight, you're a big fan of quantitative easing, where the Fed's coming in, buying the government-backed securities, the Ginnie Maes, the Fannie Maes, et cetera, bringing those rates down from there. So, right, guys, I mean, there's a million scenarios, but I think the most important thing, to your point, Corey, which is something we begged when we had Biden in there, saying, do something. Just do something, right? One program's not going to be the cure-all for everything, but if the street and investors look at it, or buyers look at it and go, hey, they're doing something, maybe that gets them off the fence and we get these home prices moving up and inventory coming down, et cetera.
John, a couple of things. One is you could, right now, today, you could eliminate the low-level price adjustments, right? All the add-ons on Fannie and Freddie Mac.
Okay,
well, those are just the different add-ons. Your credit score, LTV. We started that since 2009. Get rid of those. We never had them prior. Now we have them now. The other thing, I don't know. I think the quantitative easing is probably more difficult. But I just think that, they're headed down the right direction. But, you could do a blended rate. You could say, hey, here's my 3.5. I can't trade it in for a 3. I'm not going to be able to take this note and deed and put it over here. I can't do it.
Right.
But I can say, oh, you're going to cash in your 3.5 today at 6. We'll give you a blended rate.
A 5.
Yeah, or something
Yeah.
like that. You know, something that helped, and that would work.
Right. Right. Well, again, it's interesting, and for all you listeners, which one would motivate you to get off the fence if you were in the housing market? Would it be a drop in rates, or would it be a drop in home prices, or would you need a combination? Right? People pretty much know what they want right now. But anyways, we're gonna discuss one potential solution that was announced today. Again, builders are floating a plan to build nearly 1 million homes, and they're calling them Trump homes. Kind of like the Trump everything, right, Corey?
Steaks, watches, socks.
Yeah, exactly. Whole country is going to be labeled Trump, I think, when it's all said and done.
Everything.
Yep. Kennedy Center. There you go. That's a good one. So we're going to explore this. Again, details, we'll just tell you right up front. Details are very sketchy. This news just came out today. We picked it up. And again, not a lot of people have written about it. So we're going to do the best we can to tell you what we know at this moment. Again, whole thing may never happen. White Houses will share with you. It made some comments like, we don't really know what these builders are talking about. But I think we're all smarter than that one. So it's going to be a fun discussion when we come back with Corey and Dwight. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Corey Edge of Edge Realty and Dwight Millard of Highlands Mortgage. Once again, we finished down 167 on the Dow. Worst level down about 500. NASDAQ lost 337. S&P down 59. And again, this was not a day where we really specifically had any news. You obviously, as you see by the performance of the NASDAQ or hear about the performance, NASDAQ was the culprit. It really kind of did a little, what I call a bathtub drain impact on the Dow, meaning you see the NASDAQ kind of swirling down, and eventually just sucks the Dow with it and the S&P. That was really a lot of it today. I do want to mention, unfortunately, we are seeing some weakness in the after hours with AMD, Advanced Micro Devices. Stock has lost about $4.16 a normal session, about 1.69%, closing at 242.11. But right now in the after hours, after an earnings miss, down $20.11, 8.31% decline. Now trading at $222. NASDAQ futures, again, very early in the trading, down about 61 points right now. So we'll see if that impact happens again in regards to what I just said as far as the bathtub analogy. But enough of that. Let's get into some of the big news of the day today. Besides, the government reopened. That's right. Everybody got so excited about that one. Yeah, right. Let's get into something that came across the news wires today we want to share with you. And once again, the details are very, very sketchy. So what we're talking about is Trump homes. So let's share with you some of the details, and then we'll discuss this in great detail. Builders are working on a plan for a massive program to develop Trump homes that would address the U.S. affordability crisis while allowing private capital to deploy many billions of dollars. Lennar, which, by the way, before I get into this, I should mention the home building stocks did phenomenal. I'll start with Lennar. This includes a little after hours action, up $3.73, 3.43% to $112.53. Toll Brothers was up 98 cents. See, D.R. Horton, a big move, up $4.06, 2.71%, and KB Homes rising $1.85 or 3.21%. So home builders reacted to what we're going to share with you. All right, so Lennar and Taylor Morrison Homes are among the firms that have worked on the proposal, which calls for builders to sell entry-level homes into a pathway to ownership programs funded by private investors. Under one iteration of the plan, the investors would rent out the home to tenants whose monthly payments would, after 3 years, be counted towards a down payment if they wish to purchase the home. Such a program would be complicated to implement, one of the people said, and it's possible that it won't even gain enough support to move forward. Even so, it demonstrates builders' desire to gain the favor, or at a minimum, avoid the ire, or unusually transactional White House. Size of the program would ultimately depend upon how many builders decide to participate. Though a person involved in the plan said the builders have discussed aiming for as many as 1 million homes. At that number, the program would likely deliver more than $250 billion worth of housing. The administration, though, is not actively considering the plan, a White House official said, speaking on condition of anonymity. Private investors, they would bear any initial losses, said one of the people who asked not to be named. Many details have yet to be determined, including the role of the federally backed mortgages should play in the deal. Industry players initially pitched the plan last year to the administration and are continuing to refine the details. People, again, familiar with the matter said, quote, "We are encouraged by the thoughtful discussions between home builders and the administration that could help more Americans step into home ownership," a Taylor Morrison spokesperson said, adding that, quote, "It's too early to understand any details." Representative for Lennar declined comment. The effort comes at a time when the cost of buying a home is historically high, exacerbated by elevated interest rates and a shortage of homes in place where people want to live. While the estimates vary, it's widely believed that the U.S. needs to add millions of new homes to address the crisis. The proposal, which some in the industry are colloquially calling it Trump homes, could help meet the demand while giving the president a signature program. That's similar to the ideas behind Trump RX for addressing the cost of prescription medications. Wealth building Trump accounts that the president could use to motivate voters in the coming midterms. Again, remember those Trump accounts just went into action back in January. To that end, Trump has promoted a variety of initiatives, including plans to drive down mortgage rates by directing Fannie Mae and Freddie Mac to purchase mortgage-backed securities and push the ban on institutional investors from acquiring single-family rental homes. Trump Homes' proposal takes a different approach, increasing housing supply through a business model commonly known as rent-to-own. In past iterations, the model has resembled a standard lease that includes an option to buy, allowing families to move into a home they'd like to purchase before they have saved a down payment. Private market rent-to-own businesses have suffered from common pitfalls, including the quality of property management during the rental period and the low percentage of renters who have successfully acquired the home. A federally backed rent-to-own program could offer solutions to those problems, but coordinating the efforts of housing market players, including builders, rental companies, banks, and government-sponsored entities. In January, Pretium co-president Stephen Scher sketched out a framework for a federally backed rent-to-own program in an interview with Bloomberg Television. I should mention this article is from Bloomberg. Imagine a scenario in which rent is paid, money's held back to provide against a deposit account for a down payment, he said. And by the way, Scher's firm is among the largest owners of single-family rentals. He said, imagine where we would link arms with home builders who could build smaller, more affordable homes. For its part, Lennar has signaled its readiness to increase production once the market improves for buyers. Quote, we're very well positioned to provide affordability supply that the market needs when demand is ultimately activated by either lower interest rates or government-sponsored programs to enable affordability. That's according to their CEO, Stuart Millard, on a conference call with investors back in December. So that's, let's see, I think that's pretty much about it. All right, boys. So you two were not too keen on this when I announced this. Shocked me. I thought you'd be real happy about it. Mr. Pessimistic, I'm going to go to you first. Start laying out your argument against this. How is this not good for the market for buyers, Corey Edge?
I didn't know if you were referring to me or Dwight, because we're both.
I could have used either one of you, but I think you're more pessimistic than Dwight.
I'm certainly not saying it's not good for buyers, but even that article by itself, the builder's going to make money, the investors in the middle are going to make money, the buyer at the end may or may not make money. Lease to own options to exercise the option, I want to say I know it's less than 10%, maybe around 5% people actually exercise the option for various reasons. It's unaffordable, they can't get a loan, this or that. This sounds like a program where the builders are going to build it, they're going to have their profit margin built in, it's going to go to the investor, they're going to have their profit margin built in, and at the end, it almost sounded to me like it would be a specialized loan program that the government's going to subsidize to help these people buy, which
almost like an FHA or something in a sense. I know it's not subsidized, but low down payment compared to conventionals, etc.
Section 8 housing, it's Army housing, it's government subsidized housing. You can call it whatever you want, but it's not free market. Let's put it that way.
Interesting. Why are you so convinced that it's going to be, quote, government housing?
Because without the government, again, just going off the article, without the government cheap money at the end, the person probably could not afford to take the house down. Because it doesn't say anything about, and again, everybody can make whatever money they want. It doesn't say, hey, the builders are going to cap their profit margins at X, so they're going to get whatever. They got to report to Wall Street. These big conglomerates that own all these houses, and more power to them, they're there to make a dollar as well. They're publicly traded, so they have to have profit in there. So with all this profit going through and these middlemen in there, the end price has to equate for all that. And if the buyers can't afford it now, how are they going to afford it 3 years from now without some sort of government assistance to help?
Yeah, maybe the government would do a dollar match, right? So if you saved up whatever $10,000 because they're again banking a portion of your rent payment for the next 3 years, maybe you saved up $10,000. Maybe the government would come in and do a match. Maybe they give you 50% of it. They give you $5,000, so now you got 15, right? Or right, do a cheap grant or something along those lines. There's a lot of ways.
Yeah, but let me ask you, again, maybe I am in a bad mood today. We all write big checks to the IRS, coming up pretty soon. Is that where you want your money going? Do you want your money going to subsidize somebody's match play? That's ridiculous.
I don't think that's a fair question though, because
I guess it's better than going to Minnesota.
We know no matter what we don't know where our tax dollars go. My 6-digit check that I get to write to the IRS every year could be going to, build a new F-16 to protect our country, right? Your 6-digit check could be going to this, I don't know.
either way, it's taxpayer money that does not need to be. I mean,
Is it taxpayer money? We don't know that for sure, right?
Well, where else does it come from, John? We're the ones that balance the checkbook. It comes off from our taxes. The government doesn't make
Maybe
money.
they get private investors to come in. Maybe they get Wall Street to come in. Maybe they offer bonds. So Dwight, so let's pause on that. That's a great point, Corey. So Dwight, you always talk about USDA. Let's use, you know what? That's probably a good example.
Yeah.
USDA loans. Okay.
Bring it on.
Where does that money come from?
Well, it comes from you and I. I mean, it's from the government. But the problem, John, is in 2014, they've totally flipped the program upside down. You can't even use it anymore. So, I mean, I agree with you. There are loan programs in place currently that the government could rely on. One being, but you got to build in an area that actually qualifies for USDA under your own guidelines, right? I'm probably not as pessimistic as Corey, but I'm closer to Corey than I am probably you, because I think that what happens is that how much you gonna have to charge in rent? And here's the problem. Remember, you have to charge market rents, and you have to charge then above that to use the money. That's their own guidelines. So if market rents are $2,000, you got to charge $2,500 just to use $500.
And as an investor, right, Corey, you're limited on your upside because there is an exit price, right? Let's say you bought the house for $5,000, you're basically promising this renter that you've been backing out their payments, or I don't know what private investor is going to do that bookkeeping, but you're basically saying, all right, you bought the house for $5,000, and we guarantee that in 3 years you get to buy it for $550. Right. So you're limited on your upside from that standpoint. All right. Let's look at the clock. We are way late. Let's run into the final break. We'll continue our discussion on Trump homes. Let's wrap it up with Kristen Snow right now, Traffic Center. Hello, my dear. Back to the Jon Sanchez Show on Newstalk 780 KOH with Dwight Millard. Phone number, sir.
Yes, sir.
Mr. Corey Edge of Edgeability. Phone number. Beautiful. Thank you, boys. Do appreciate it. All right. We're talking about Trump homes and the housing crunch. Once again, a deal got floated by Lennar and Taylor Stevenson in regards to potentially a plan, and they're calling it, I don't know if Trump's calling it or if they're just doing it to suck up to the president, but Taylor Morrison Homes and Lennar is calling this Trump homes. This is where the goal would be to build 1 million homes by these publicly traded developers, build 1 million homes, but it's a rent-to-own program. So you would come in, and again, if you just joined us, details are very sketchy at this point. Trump administration saying, we really have no comment. We really don't know what these guys are talking about. Again, we don't believe that, but that's what the press is saying. But anyways, you'd come in, and let's say your rent payment's $2,500. They would keep back, I'll just pick a number, $300 every month. So in 1 year, you'd have $3,600 saved up. 2 years, you would have $7,200, and that could be used as a down payment for you to buy that house. So we've been debating, very healthy, wonderful debate today with Corey and Dwight, the pros and the cons of this. So Corey, as I was saying before we went to break, as a real estate investor, to me, that would not be a very enticing program because I know, once again, what price I'm going to be taken out at. Right? Are they going to allow the investor to make 10% or 20 or 5? Right? That's going to have a big issue, big delta. I thought I was going to bring that up. Yep. Which we know some builders are doing, right? Yeah, thought there was, even locally, I thought there were some developments where they were building them to rent them. Right. They got to turn the capital. Yeah. But you were going to say something?
Well, if this is so good, why aren't they just doing it now? Why don't they just call, hey, I'm going to go buy that subdivision, call it a Trump subdivision, Trump Avenue, Trump Drive, Trump Circle, whatever they want. Yeah, they're not doing it now. So that it just tells me that they're relying more heavily on the government intervention in this. I mean, they got Taylor Morrison, Pulte, Lennar, they all have deep pockets. They got Wall Street pockets, right? So they could go do this right now. And then, so I guess it's an effort. We all kind of like efforts. At least they're talking about it. I mean, the previous administration didn't even know how to spell home. Yeah. At least
and again, we may see how this evolves over time, or maybe it'll be another one of these potential housing programs that just go out the window, right? We'll never hear anything more about it. But again, the stocks popped on the news today that this is going to happen. This brought up one other question I want to squeeze in real quick before we go to break. And that is, Corey, these are going to be small homes, right? That's not down the bailiwick, or not in the bailiwick of Lennar. Lennar is a bigger builder. So what would be their incentive to go build a 1,500 square foot home? Okay. Yes. Get the stepped up basis. Okay. Perfect. Very good. All right. It's a discussion for future dates. That's for sure. We'll keep you updated when we learn more about it. In the meantime, God bless. Have a great day, everybody. We'll see you tomorrow on the Jon Sanchez Show. See ya, boys.
Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited, an equal housing lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.